What's going on, traders? Welcome to the Weekly Watchlist, where I do a technical analysis and give you some of my thoughts on the tickers up here on the left. So as always, we will cover our broad market, our core list of companies with NVIDIA earnings finally wrapping up the group there. And we do have new tickers for the quickfire round, which the Discord members did vote on. If you want to vote for next week, feel free to join the Discord. It's completely free and linked down below in our description. One quick note before we get into the analysis, the market will be closed on Monday for President's Day, so no equity trading. There will be some futures activity on Sunday into Monday, but it will be limited and on light volume. Jumping right into our SPY weekly chart, talking about candle structure and location as always. For structure, we've got a fairly small-bodied and compressed range this week, especially in comparison to the prior 5 weeks or so of trade. But again, it's a fairly bullish structure, but I think location here tells everything we need, right? We had a week down, especially retraced 100% of that move, and now this week we were unable to even trade back into the prior week's range. So everything in my estimation here, value is building higher. The weekly bar does look good for some more upside continuation, especially being able to close here at all-time highs. Now, one thing I don't want to ignore, of course, is the fact that volume is slightly tapering off to the downside, but as you move into blue sky territories, we know this, buyers are less likely to commit a lot more volume here. You see more volume being committed on pullbacks, buyable, and controlled moves. It's just harder to get, again, the new money buyer to commit to these higher prices right off the bat. So let's break it down on that daily time frame and check out what actually happened this week. We talked a ton in the midweek market update about the concept of liquidation break. We saw it on Wednesday, and then we saw the same exact picture play out on Thursday. So hopefully you were able to take something away from that and use it there on Thursday. But how do we, go forward here from this situation? Well, I would like to classify this entire prior week's range as just a balance area. And on Friday, again, late in the afternoon, we saw that rip your face off rally as we started to break outside of that area of consolidation and balance. We can really illustrate this on like a 30-minute time frame. You'll see it much clearer. Again, where is your balance? It's this area right here. So let's actually mark in those areas that we can trade off of. Again, the low end of your balance is going to be here, closer to that 388.85, and the high end, the balance area highs are more around that 391.50. Again, Friday afternoon, here's that rip your face off rally in the late day. We're starting to break out of this consolidation to the upside, which is a bullish thing. But knowing that, we can play this in a few different scenarios. We've talked about this on the channel in the past. We have balance rules in play. We can either see a look above and go where prices just continue higher into all-time highs, or of course we can look above and fail, right? So if we fail back into the range, meaning we violate back to the downside, that 391.50, your target is the low end of the range at the 388.85. I would argue that the market may move as well. Again, fresh in the mind of the market is the liquidation break low from Wednesday at the 387.50 mark. So again, if you see the look above and fail, meaning on Tuesday or Wednesday, we trade back into this range. Of course, your first target is going to be right here. Second target will be there at the liquidation break lows, okay? So that's how you're going to play this early on in the week. Anything underneath, and again, we talked about in the midweek market update that is critical support there at 384.85. Anything underneath opens up the possibility for a gap fill here at the support trendline and 50 SMA. While we're here, though, I do also want to do this and just show you where we're trading in terms of location, okay? If I redraw our support trendline as a channel, and we draw in the top of the channel, again, where are we trading in relationship to this channel? Smack at the top. We're starting to break out of it to the upside. It's just something I want you to be aware of. Again, can markets move higher and ignore channels? Absolutely. There's nothing stopping this market from moving higher. But once again, I just want to illustrate the risk here that you're not really setting yourself up for the best trade location if you start to initiate new longs up here at these all-time highs as we're breaking above trendline resistance, right? So it's just something to keep in mind in terms of resistance. I'm not trying to foreshadow a complete market crash, market rollover. I just want you to be aware, once again, of a little bit more context in where we're trading, okay? Moving over to our Qs now, you'll notice almost the same exact picture. If we zoom in here on what the price action, Again, we had a week's worth of balance, and on Friday afternoon, we're starting to break up and out of it to the upside. So where is our balance area lows on this one? A little bit clearer and easier to see on the daily, so we won't zoom in. It's going to be at 332.43. Call it 332.50 if you want to play a round number. And then the balance area highs is definitely that cluster of 3 there at our 335. Let's call it the whole dollar. And we're about, $1.50 higher than that as of the close of regular trading hour sessions on the Qs on Friday. Okay, so same situation is at play. If we move higher, just looking for blue sky levels, whole and half dollars, intraday levels that do form. If we trade back underneath that 335 level, we'll call it, we're going to target here first, right? The 332.50, and then anything underneath is our liquidation break lows from on Wednesday at the 330 whole dollar. Okay, if we do go lower, again, just like SPY, the opportunity for a gap fill is there, but based on our action and a little bit of comparative analysis here, our liquidation break that happened on Thursday instead of Wednesday, if you remember SPY, it was much deeper and much lower, and it was actually a red-bodied hammer candle there on the Qs, right? It's a much more bullish candle. Our body is up at the highs. It's also in line with that 3-day balance high area. So in my estimation, the Qs are stronger than SPY here in that sense, and it looks like continuation higher is more than likely on the Qs as opposed to a deeper pullback. Again, if I redraw our channel here, redraw as channel, just draw that in. Again, we're trading at the upper end. There's a number of ways we could have drawn this in, right? I could have done it like this as well. We'll redraw. We'll respect these highs from in the past, right? We had a number of touches in here. We violated it once. We came right back in. Again, we're starting to violate it if we redraw it that way. It's just, again, something to give you a little bit of context here and not necessarily say that the market's overly due for a pullback. I just want you to be aware of where we're trading at in relationship to some of these things. Moving over to IWM now. Again, I think this one actually looks fantastic, and the reason being here is the fact that we are just consolidating sideways, and we're not necessarily getting too far ahead of ourselves like we saw kind of on SPY and the Qs, right? We didn't see that rip your face off rally late in the day on Friday. As a matter of fact, we're still remaining within the weekly balance here, which I think is a good thing, especially considering the magnitude of the move we're coming off of. So if we can put in a little bit more sideways action here, if we can form a nicer bull flag, I don't see any reason why the IWM and our small caps would not continue to just flag higher. That's been the MO, ever since October, right? Late October, early October, mid-October. It's been a move higher, balance for a few days, balance for a few days, move higher, balance, move higher, balance. I mean, you name it. It's just bull flag after bull flag after bull flag, and we have yet another one here in IWM. Of course, the magnitude of this one is much larger. It would be great if we even pulled back and filled that gap, right? Repaired a little bit more structure here and then moved higher up and over some of these highs from in here. Let's just put a value to those numbers. Again, if we're speaking about where the majority of the highs were, we're looking at the 228.85 area. The all-time high, of course, is the bubble at 230.32. Anything over that, blue sky levels, again, we talked about the gap fill, the support trend line is there, and anything deeper here on IWM would be a move back into retest the top end of that balance at the 215. But based on how this one has been acting, again, do I think it's going there? Not necessarily. I think we consolidate a little bit longer through time and then potentially see a breakout higher. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Jumping into our Apple daily chart, you can clearly see now our head and shoulders pattern that is at play with a lower high being set right around our 138 whole dollar. But before this pattern plays out in full, I would just remind you that we have critical daily support here at 133.75 as noted by a double bottom on Thursday and Friday. Now that's going to be your key to determining what direction Apple goes this week. I think the likely scenario is the fact that we will probably hold that as a new set of higher lows, right? And then we'll see a break of 138 to form a new set of higher highs and maintain the daily uptrend. That's what I think will happen. Again, given the fact that we saw the rally late day in SPY and the Qs, I think, Apple will sort of follow in suit and move higher. If we break the double bottom though, then yes, starting to look at the head and shoulders pattern playing out and retargeting our area at 131.17. From there though, keep in mind we have 50 SMA, support trendline, and horizontal level all providing super support. I would expect a first touch bounce. Anything underneath, again, not anticipating it, but a downside target in Apple would be at 126.64. Still really liking this setup here in Netflix. We have a pressure cooker top at our 566, the whole dollar. If we can consolidate longer in this range and then get a break, I think it'll be that much more powerful. If we look to the left, very little market structure in this area of the chart, so it could be a significant break and move in Netflix over that 566. To the downside, again, we are holding on to this support at 553 with a small-bodied indecision candle, so I do think, again, that's the likely scenario there. But if we break down, there are some, very close supports to pay attention to. First one's at 543.50. Anything underneath is at 537.80. And then here around our 531, let's just call it 531, the whole dollar, is your next up as key support. They're very close, but again, with a shortened trading week, these are certainly things that could be in store if we see some downside activity in Netflix. Keep in mind also there is a support trend line that has been respected up until this point, right? That looks something like this. Again, I think the likely scenario, as I mentioned already, is sideways and then a potential break over the 566. Jumping into Tesla, it feels like a lot of people were not happy with its movement this week, and it's completely normal to have a stock move to the low end of its range, and that's what I want to remind you of here. It's not like it's falling out of the sky, it's just at the low end of its consolidation range. So a hammer candle here, large lower wick, nice green body closing at the highs. In my estimation, because it's at support, all of these factors, I would expect a retest of 840 sometime this week, and anything above that is kind of our all-time high pressure cooker top resistance here, closer to 880. Of course, we have the true all-time high to contend with after that, but 880 would make a nice target to the upside. To the downside, if we fail here and we fall from this critical support, right, we have 800, anything underneath is closer to 780, and then 50 SMA is underneath that, right? So there is some support below us. I don't think that Tesla completely free falls. I don't want to ignore the volatility that has been in this name, right? It could potentially do anything. If I had to pick out supports underneath the 50 SMA, I would first look at this area here. If we grab the other tool for a second, it's going to be at our let's call it 717, 718, and then anything underneath is the breakout zone from in here, closer to 653.67. Now, do I think it's going there this week? No, absolutely not. I just gave you the case for the upside continuation from the green hammer, but again, not ignoring Tesla's volatility, it could, if it breaks 50 SMA, get kind of nasty all the way down into some of these levels. Leaving BABA zoomed out a little bit so you can see where we're at in terms of our gaps left, right? We have a small gap remaining here and then the large gap remaining above from 280 up to 290. But for now, what I want to focus on is the action that actually happened this week, right? We saw a break here of a key area of resistance. We thought we would go and fill that gap completely. Didn't happen. Failed back below the range. Tried one more time. Filled most of the gap. But where did we go? Right back to the breakout point. So in my estimation, it's kind of a slow and choppy breakout from this level. And I wouldn't be overly bullish or bearish. The fact that we couldn't fill the gap completely, there should have been very, very little resistance in that area of the chart. The fact that it didn't fill completely is slightly concerning. So I'm not overly bullish here, just based on the fact that we're holding this area as support. If it breaks, down and we go lower, right, our key area of support is here at the 261.77. Anything underneath probably comes down to a full rotation back to, again, remember the balance rules. Here is an area of balance. Failed break to the upside, always retest the bottom end at 252.78 here on Alibaba. Facebook also leaving a little bit zoomed out so you can see the context of the resistance trend line most importantly there. We are forming, again, I use this framework to trade within all the time, a balance on top of a balance. So how do we treat this? Well, in my estimation, Facebook, it's either going to be the trade over our 273.51 or under our 269, we'll call it the whole dollar. So if we go over, we're looking at a target of 278.82. If we go under, we're looking for a rotation to the bottom end of the prior balance here at our 264.81. Anything underneath that, again, gets kind of intense because of our earnings sort of sell off there, but 200 SMA will be in between ranges there, which you should be using as an area of support. So again, under 269 or over 273.50 here in Facebook for this week. NVIDIA, thank goodness, finally breaking out of this intense range that we've been stuck in for months, right? So because we've seen the breakout, now I think it's time to cool off a little bit. That could have been the pre-earnings run-up. Again, I always advise that you do not hold options through an earnings announcement, and that does not change here on NVIDIA. So it's something to consider. One thing I do want to point out, though, is the fact that if we go to like a 30-minute time frame chart, NVIDIA had a near perfect pressure cooker top forming on, that day. It made new all-time highs before it sold off on Friday. So Thursday and Friday formed a beautiful area here up around our 611 whole dollar, right? So in my estimation, if that comes into play early on in the week, you could look at that as an intraday setup to take a scalp to the upside. Now, do you want to be hanging on to calls here after we've already made a monstrous movement to the upside? Probably not the best idea for a swing trade location, but there's a scalp idea, again, if we break that 611 whole dollar and pressure cooker top. For now, if we consolidate above the prior all-time high around that 590 mark, I think that sets up the bull case for, again, earnings and a huge daily bull flag to be formed here and potential continuation later on, again, if we do not see a break of 611 early on in the trading week. So moving over to Microsoft. Now this one's a little bit different because it's slowly trying to grind higher, and it just feels like no one's really getting excited about buying Microsoft, right? If we look at the volume and what's happening down here, it's quite clearly tapering off, even though we're slowly, again, grinding up into all-time high territory. So if we draw in an area of resistance, kind of a pressure cooker top at the 245 mark, if we break it, sure, you can look for calls and try to anticipate the break there, but I would be skeptical. Right? If we were going to go, right, we should have gone on the break over the all-time high as we retested it a number of times. It just never really materialized in a true and really strong upside break here in Microsoft. So in my estimation, I'm not as bullish on this one. It just doesn't feel like the best possible scenario. One thing to keep in mind is we do have a support trend line in play. So if we do something like this, you can see we are respecting it for the most part. If we break it, then I would just start to look at targets lower. 240 is kind of the line in the sand. Anything underneath, and we have to contend with this period of volatility here where there's not a whole lot of market structure. So under 240 in Microsoft, in my opinion, could get kind of nasty as the next key market structure area is all the way down at 231. And last but not least, we have Amazon. And this one too feels like no one's really excited to buy it anymore. It just kind of dribbled lower all week. And now we're starting to see a dead cat bounce at prior area of support or resistance, excuse me. It's not the cleanest area of support anymore. You can see we violated it a little bit in there. So in my opinion, if it fails, once again at 3250, we're probably coming back down to 3200. 50 SMA will be in between ranges, something to watch out for intraday. If we go lower, of course, critical support there at the 3078, as noted by all of these touches in here, to the upside, right? If the dead cat bounce results in more, if we do see upside continuation, then your target is here at 3350, just about. We'll round that one up. And again, on a shortened trading week, I'm not really anticipating up to 3430. Just doesn't seem like anyone, again, just like Microsoft here, doesn't seem like anyone is really excited to be buying Amazon, at least this past week. Kicking off our quickfire round with PLTR. This one's interesting because we have earnings coming out before the bell on Tuesday morning. Just to give you a heads up, the anticipated move is plus or minus 6. That'll put us closer to 26 at support or up here at 38 closer to resistance. That's if we go to and stop at the expected move. Of course, assuming the expected move is correct. I'm not going to give you an idea of direction because, as you know, I always treat earnings as a 50-50 event. I cannot advise you something that I would not do myself, so I won't. And I think the most ideal situation, though, is if earnings has absolutely no impact on price. Now, why do I say that? If we think about what PLTR likes to do, it likes to consolidate over a number of weeks into a tight price range. And if we look at what we have here, it's a short period of consolidation and a large price range. So if earnings has no impact on price, it'll give us the opportunity to see whether or not PLTR will continue to consolidate inside of this range, and we will have clear breakout sort of areas, right, over the area of resistance or under the area of support. NEO also has earnings coming up on the 1st of March. This one does sort of have the influence of the pre-earnings run-up, right? It's a more popular stock. It's a newer stock, and we may see that effect kind of take hold here. But in terms of the technical picture, let's check in on this. Of course, we are breaking out of this daily bull pennant, and if we look at this again, we have a daily cup and handle, or ignore the cup part and just call it a daily bull flag, right? So all of these things, in my estimation, are bullish patterns. It looks like we are going to see more upside here here. The key is that we hold on to 59 as support and we make a new higher high above 64.32. If that doesn't happen, then look, we have a high, lower high, equal high. If we don't make it there, that's a lower high, and I do think NEO would come back down closer to that 55 or 54.50 area. But based on, again, the pre-earnings run-up, the fact that we have a number of bullish patterns happening, I think upside is more likely than downside. Lemonade also has earnings coming up closer to the first of the new month coming up, so we are breaking out of an area of consolidation. We have easily doubled that range to the upside, but based on the fact that we don't really have much market structure up here, I wouldn't be surprised if Lemonade just floats higher through, again, this market structure that doesn't exist there. I can't ignore the fact that we do have an inverted hammer candle, and again, you do have the pre-earnings run-up effect, but the inverted hammer, if we pull back, I want to see it hold 155. If it doesn't, then we have a look above and fail, in which case the target will be down here at 141.16. Peloton hasn't really changed much since the last time we looked at it. It's almost an exact mirror image, right? We have a earnings in our rear view mirror now, so maybe this green continuation candle will do what it's supposed to do and continue, right? But I can't ignore the fact also that we have a resistance trend line quite clearly intact, something like this, right? We are forming lower highs repeatedly, so we really need to see at least a move into here to form an equal high and then a higher high after that. That would keep the trend clearly up. If that does not happen, then this turns into a flush point at 144.50, we'll call it. The 50 SMA is there. If that breaks, I don't see why Peloton would move much lower into 125. But based on the volume, based on the candle that we saw on Friday, my initial reaction is that we will see upside continuation over the resistance trend line. We haven't really talked about net in quite some time here, and what we're looking at is a gap down from earnings, but what's interesting about it is look at the volume here and look at the actual structure of this candle. It's a hammer candle, right? If that volume was truly some selling strength, they would have been able to close it down there at the lows. Now, of course, I will say, we won't ignore the fact that the market rallied at the end of the day, so maybe that has some impact on the lower wick here, but playing the chart as it lies, I do think that we want to see a break back over, again, our 87 resistance. If that happens, fill the gap up here to 89.34 and then potentially watch for continuation into all-time highs. I will say that we have, right, look above and fail. This is our range here, and if we truly do fail back down into the range, if we get rejected at 87, the target, as always, is the bottom end of the range at 72 just about. Etsy, the uptrend here is strong. I mean, look at this beautiful action, a move up, a pullback, a move up, a pullback, a move up. Now we're forming a daily bull flag up here at all-time highs. I think if we can break out above our 234.30 mark, then it's off to the races here into blue sky territories. Whole and half dollars, probably want to be watching out for 250 psychological. We need to hold on to this area as support at 225. Just about anything underneath probably puts us back down around 205. Keep in mind earnings on this one. I will say, again, pre-earnings run-up doesn't really apply to this one. Look at what happened here. It's been around. It's not really in the headlines as much. It's not like NEO, an electric vehicle maker. So I wouldn't say that the earnings is going to have that same positive impact, but something to keep in mind. XL is an electric vehicle maker, and again, just sort of consolidating sideways in a range. I wouldn't really look to be too active on this until it breaks out over 22 with some strength. I wouldn't try to short it either. These things can be very, driven by news and headlines and things like that. So again, being short here, probably not the best idea. The uptrend is kind of intact, right? We are forming here, stair-stepping higher. Now we're consolidating sideways. It's just kind of how these things go. I'm sure the next catalyst that moves this is either going to be over 22 or under that 1865 mark, so watch out for both of those levels. AMD is experiencing a look below and fail, right? So here we go. Here is our range. We looked below. Now we're failing back into the range, and my target here is up at 95.69. Call it 96 the whole dollar, and then if it truly wants to go, it'll come up to 98. In which case, I would expect it to back off a little bit. In terms of structure of the candles and everything, the green continuation candle does look good, holding 50 SMA as support. If it rolls over, you want to see it hold on to that 90.66 area of support, and then maybe potentially make a bounce off of that to fully, rotate to the top end of that range. And last but not least, I'm realizing that we have 9 over here. We usually do 10, so we'll throw in Bitcoin at the end just for the heck of it. But Rocket was our last recommendation, and it is breaking below a critical area of support. Now, this one's interesting because, again, earnings will impact it coming up later on in the month. For support below us, I would say that we need to look at 1986. I'd probably call it a little bit lower at this point. Let's adjust to sort of take into account the most recent price action here. It's really closer to 19. Let's just call it 50. We'll split the difference there. Call it 1950. That's a critical area of support. This, of course, is not going to be as much in play, but it is where we bottomed out, here once. So I would use that as a last. And last but not least, moving over to Rocket, I just noticed that we have 9 over here on the quickfire list, and we usually do 10, so we'll throw in Bitcoin at the end here in just a moment. But for Rocket, we're at that 50 SMA. We're resolving that right now, and most importantly, we're kind of smack in the middle of this range. So there's really no directional action that you should be taking in my estimation. If you're already short, great, hold it short into our support here at 1950 just about. If you're not short, again, I probably wouldn't try to short it here. Again, smack in the middle of the range. That's where you get chopped up. And I wouldn't also try to take it long either. So, for me, it's kind of wait until after earnings on this one. That'll probably move it either over our 2250 resistance and into the next one at 2450, or back down to the 1950 and potentially lower after that. And moving over to Bitcoin, just to wrap it up, I really like what's going on this chart, actually. You'll notice that we have a perfect daily bull flag forming, right? Something like this. Again, if you can't play the Bitcoin futures or you don't want to buy Bitcoin itself, you can play companies like Mara, M-A-R-A, or Riot, R-I-O-T. Those are both impacted by the price of Bitcoin. We're pretty much sitting just below 50K, the round number, psychological. I don't see why it wouldn't go there and potentially break out higher. I do think that Bitcoin could potentially go much higher throughout the course of 2021. It's being adopted into some mainstream sort of companies, right? Tesla bought a bunch of it. There are other companies that are sort of spurring this into their treasuries. And, although you guys know I'm not a fundamental trader, you can't ignore the fact that, it's being picked up and it's becoming more mainstream and acceptable as a form of payment. And because there's a limited number of Bitcoins that can physically be mined, right? It's not like the value here can be changed by just making more of them, right? So because there's a limitation, again, I do think it could go much higher. I think 50,000 is in store quite quickly. And then after that, I mean, who knows? I think, the likelihood that it just continues higher over the course of time is definitely something that I'm watching out for. So that's going to be it for this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section. Remember that we do have a holiday on Monday, and I wish you a green trading week.